and the balance in each case by issuing equity shares. The company's share is currently selling at 300, but is expected to decline to 250 in case the funds are borrowed in excess of rupees 20 lakhs. The fund can be borrowed at the rate of 12% up to rupees 5 lakhs and at 10% over rupees 5 lakhs. The tax rate applicable for the company is 25%. Which form of financing should a company choose? Alright. Let us solve this question by starting over that statement of marginal costing profitability. It starts with EBIT. This project is expected to yield EBIT of 10 lakhs. So whether you borrow it in any ratio, your EBIT is going to remain 10 lakhs. So in alternative 1 also it will be 10 lakhs. In alternative 2 also it will be lakhs. Which is to be deducted now? Interest. We have understood why interest is deducted first. Let us see the interest rate. The funds can be borrowed at the rate of 12% up to 5 lakhs and 10% over 5 lakhs. In this case, you are borrowing only 5 lakhs. So it will be 5 lakh into 12%. This is 60,000 rupees. In this case, it will be somewhat typical, not much typical. The funds can be borrowed up to rupees 5 lakh at 12%. So 5 lakh into 12%. Here you are totally borrowing 20 lakhs. So remaining 15 lakhs, what is the borrowing rate is 10%. Start. This will be 60,000 for first 5 lakhs and 1,50,000 for another 15 lakhs. So this answer will be earning before tax. Start it. This will be 9,40,000. This will be 2,10,000. So 7 lakh. Start it. Minus taxation. What is the tax rate given in the question? Tax rate is 25%. $9,40,000 into 25 divided by 100 is 2,35,000. That will be deducted 25% of EBT. Is correct. Please concentrate what I do when I solve the question. I never write down taxation. I will be directly writing down EAT. Sir, how to find out EAT from EBT? EAT is equal to EBT into 1 minus T. After tax, what is the profit? After tax, what is the profit? How to find out? EBT 9,40,000 into 1 minus 0.25. This will be 0.75. See, if 25% is my tax, after tax profit will be 75%. So 75% of this. It is 9,40,000 into 0.75. It is 7,05,000. You can do it by that method also. EBT minus tax is equal to EAT. Here also it will be 7,90,000 into 0.75, which is 5,92,500. Minus preference dividend is 0 in both the cases. This is earnings available to equity share holders. 7,05,000 5,92,000. This is nothing but earnings available to equity shareholders. We need to find out EPS. For EPS, we will require N. Number of shares. How many number of shares might have been issued in this case? Alternative 1. Let me find out of alternative 1. How much money was required? 45 lakhs rupees. The shares will be issued at face value? Never. The shares is always issued at its market price because company wants to earn benefit. What is the market price? Let us see. The company's share is currently selling at rupees 300. It will decline to 250 if your company becomes more risky. The price of the company will be decreasing. It is expected to decline 250 in case the funds borrowed, that is debt, is in excess of 20 lakhs. Is debt in excess of 20 lakhs in this case? No, debt is 5 lakhs. So what will be what will be market price is 300 rupees. You want 45 lakhs rupees. One share will give you 300 rupees. Then how many shares are to be issued? 45 lakh divided by 300. It is 15,000. So number of shares are 15,000. How I have found out? 45 lakhs total money required. 45 lakhs total money required. One share is giving me 300 rupees. So total number of shares I need to issue is 15,000. In this case, what will be number of shares? Try to understand. We need 30 lakhs rupees. One share will be of 250 rupees? No. Because 250 is when the debt is in excess of 20 lakhs. Is it in excess of 20 lakhs? No, it is exactly 20 lakhs. You are borrowing from outside exactly 20 lakhs. So your MRP will still remain 300. You want 30 lakhs rupees. Per share, you will be getting 300 rupees. You need to issue 10,000 shares. Number of shares are 15. Excuse me. And number of shares are 10,000 shares. You can easily find out your EPS. 7,05,000 divided by 15,000. 47. 5,92,500 divided by 10,000. It is 59.2. See, up till this point of time, it was looking that profit in the alternative 1 is higher, where the debt is lower. But ultimately in alternative 2, for this company, the EPS is higher in this case. Can anyone tell me, up till this stage, the profit was higher in alternative 1? Why it has happened that now in EPS is higher in alternative 2? Kishan?
Number of shares are not like alternative 1. They
exactly.
are
number of shares are lower. So you have issued less number of equity shares. The number of partners are less. If number of partners are less, ultimately it will be benefited to you. Not in every case the answer over here will be higher, but try to understand here you are trying to take more risk, debt. More risk, then your profitability will be, your expected profitability will be higher. For this company, actual profitability is also higher if their forecast is absolutely correct. Which decision you will select? You will borrow debt equity in the ratio of 2:3, because it is expected that in that case your EPS will be higher maximum, and this decision is nothing but capital structure decision. So slowly and gradually we are going to capital structure decision. We are telling to the companies which decision you should follow, alternative 1 or alternative. Is it all right? So this is how to take a capital structure decision, maximizing EPS. So find out EPS and then try to maximize it. We are going to